Ever wondered how the market is evolving with the advent of AI? The surge in S&P 500 and Nasdaq indexes has been a hot topic lately, and one cannot discuss this trend without mentioning Nvidia. With its market cap soaring to $2 trillion, Nvidia stands as a testament to a significant shift in the investment landscape. This shift is towards AI and tech investments, with companies like Nvidia and AMD emerging as the leaders in this field. Nvidia's impressive revenue jump of 265% and a whopping 769% increase in net income are not just mere numbers, but a testament to the surging demand for AI technology. These figures embody the company's solid position in the AI market leadership, underlining the strategic pivot to AI-centric investments. But Nvidia is not alone in this race. The market's keen focus on tech and AI stocks extends to other players like Dell Technologies. This attention highlights a narrowing investment landscape, where the spotlight is increasingly on companies that are at the forefront of technological advancements. However, this focused attention also brings with it certain challenges. Navigating a market driven by AI growth isn't a walk in the park. It necessitates a strategy that includes risk awareness. This is especially true given the market's narrow focus, where a handful of companies dictate the market trends and, consequently, the investment paths. In a nutshell, the market trends are evolving, driven by the rapid advancements in AI and technology. The rise of companies like Nvidia and AMD underscores this evolution, marking a shift in investor preferences towards AI and tech investments. The impressive growth numbers these companies are showcasing are a testament to the increasing demand for AI technology, solidifying their leadership in the AI market. Clearly, navigating a market driven by AI growth requires a strategy that includes risk awareness, especially given the market's narrow focus. As we delve deeper into this AI-driven market evolution, it becomes increasingly important to stay abreast of these trends, understand the potential risks, and craft a strategy that can help navigate this exciting yet challenging landscape. But what risks lurk within these current market dynamics? Let's delve right into it. A significant risk that investors must be aware of is the divergence observed in the Nasdaq 100. Despite its overall climb, the growth of this index is increasingly reliant on a handful of stocks. Meta and Nvidia, for instance, are two such stocks that have been driving the Nasdaq 100's gains. Together, these two tech giants contribute to nearly 70% of this year's index gains. This statistic is quite staggering, and it underscores a potential vulnerability in market breadth. The performance of the Nasdaq 100 is becoming more and more dependent on a select few, in this case, Meta and Nvidia. This concentration is not necessarily a bad thing. Meta and Nvidia are both robust companies with promising prospects. However, the concern here is that the index's performance is not accurately reflecting the health of the broader market. Instead, it's being skewed by the performance of these two stocks. This means that if these two companies were to falter, the index could take a significant hit. This concentration risk is something that investors need to be mindful of. But it's not just the performance of Meta and Nvidia that investors need to watch. There are other companies within the index that also have a significant influence. If any of these key players were to experience a downturn, it could negatively impact the index performance and, by extension, your investments. Moreover, this concentration might lead to a herd mentality among investors, causing them to overlook other potentially profitable investment opportunities. This could result in an overvaluation of certain stocks and a corresponding undervaluation of others. So while there are certainly opportunities to be found within the Nasdaq 100, it's crucial that investors don't put all their eggs in one basket. Diversifying your investment portfolio can help mitigate the risks associated with this concentration. In conclusion, the divergence in the Nasdaq 100 and its reliance on a limited number of stocks present a notable risk within the current market dynamics. This concentration suggests that the index's performance may not fully represent the wider market's health, presenting a risk factor for investors to consider in their strategy. Now let's delve into some economic dynamics that impact the market. First off, we have the Treasury bond challenges. Recent 20-year Treasury bond auctions have revealed some potential stumbling blocks in managing the U.S. deficit at sustainable interest rates. This is a delicate balancing act, and the slightest misstep can send ripples through the economy. Investors need to keep a sharp eye on these auctions, as they can provide valuable clues about the state of our economy and future interest rate trends. Next up are the economic indicators. Recent data has shown a 1.5% rise in new home sales. This is an encouraging sign, as it indicates that consumers are confident enough in their financial situation to make significant purchases. Furthermore, there's been a 3.2% GDP growth in Q4, another positive sign of economic trends that investors should keep a watch on. These indicators can provide a snapshot of the health of the economy, helping guide investment decisions. Finally, we have the Fed's interest rate policy. The Fed's higher for longer rates are aimed at managing inflation, which has been a hot topic in recent months. Inflation can eat away at the value of investments, so it's vital for investors to understand how the Fed's policies might affect their portfolios. The key here is to stay informed and adjust investment strategies as needed. In summary, these economic dynamics, Treasury bond challenges, economic indicators, and the Fed's interest rate policy can significantly impact the financial market. They can affect everything from the value of your investments to the overall health of the economy. It's important to remember that while these dynamics can present challenges, they also offer opportunities for those who can navigate them effectively. Investors need to closely monitor these economic dynamics in the coming months. Are you looking for some investment gems in this evolving market? Let's delve into a few prospects that are shining bright. First off, we have Coinbase. This user-friendly platform supporting the trade of major digital assets is on a path for significant earnings growth after its most profitable year to date in 2023. Next up is the Progressive Corp. This insurance giant has a history of outperformance, and its impressive quarterly results make it a compelling investment option. Then we have Meta Platforms, controlling leading social media platforms and generating substantial ad revenue. Even with investments in emerging technologies, it maintains profitability in its primary operations. Finally, Snap is showing consistent growth in daily active users, which underpins its strong market presence. With its focus on creative content and new features, revenue trends indicate a path towards future profitability. These companies offer compelling investment opportunities in the current market. But what about the crypto market's momentum? The crypto market is riding a wave of positivity, fueled by various factors. One of them is the anticipation around Bitcoin halving, a process that cuts the reward for mining Bitcoin transactions in half, decreasing the supply and potentially driving up the value. Another driving force is Ethereum's impressive 30% gain, spurred by network upgrades that promise greater speed and efficiency. The growth in blockchain gaming is also noteworthy, with new games and platforms emerging, offering a fresh avenue for crypto investments. Moreover, the market's momentum is being strengthened by regulatory acceptance in places like Hong Kong, where cryptocurrency trading is gaining legal recognition. The crypto market's momentum is bolstered by these key highlights. It's a vibrant and dynamic space where innovation meets investment, and where every day brings new opportunities for those who are ready to seize them.